Welcome, Ira. Investors are readjusting the path of rates following Fed Chairman's less dovish tone. Is this the right reaction in your opinion?
Well, I think the initial reaction right after the Fed meeting, when you saw more hawkish dot plot and some upgrade in the summary of economic projections, those really affected the front end of the yield curve, and you saw two-year yields sell off dramatically. Subsequent to that, you've seen the back end of the curve, so the 10-year bond and 30-year bond, break some important technical levels. And I think what you're seeing now is a much more of a technical move than fundamental. And because of that, we have to look at important levels. So the next important level for the 10-year Treasury is 4.72%, which is a yield that we haven't seen for well over a decade.
And which of the changes to the summary of economic projections surprised you?
Yeah, so all of them did a little bit. I mean, it's not a big surprise that you had the GDP and CPI forecasts upgraded slightly, but I really think it was the dot plot. The fact that you had a preponderance of members move up the interest rate that they think the federal funds will be at the end of 2024, that really surprised a lot of us. I'm not surprised it moved up a little, but the fact that it moved, it basically reduced two cuts from what was expected in 2024 was pretty surprising, and it clearly surprised the market as well. And I think that the move that we got right after the meeting was completely appropriate given that surprise.
Thank you, Ira.